Step into the bustling streets of Nairobi, and you're stepping into the heart of one of Africa's most dynamic financial ecosystems. Kenya's banking sector is a powerhouse, shaped by the digital tidal wave that was M-Pesa. With over 40 licensed banks, all vying for your attention, millions of citizens who live and breathe mobile banking, and a powerful regional influence stretching across East and Central Africa, the competition is fierce. Kenyan banks aren't just competing on traditional metrics like interest rates. They're in a constant battle for supremacy in digital innovation, customer service, and sheer accessibility. But this vibrant, crowded marketplace creates a paradox of choice. With so many options, from towering financial giants to nimble digital-only players, how do you, the customer, find the one that actually gives you the best value for saving, borrowing, and navigating your daily financial life? For most Kenyans, the decision-making process is a practical one, boiling down to a few crucial questions that directly impact their wallets and their peace of mind. First, in an economy where every shilling counts, does the bank offer a competitive interest rate on savings? A good rate can mean the difference between your money growing or being eroded by inflation. Beyond just saving, can your bank also be a vehicle for wealth creation? Many Kenyans look for banks listed on the Nairobi Securities Exchange, seeking opportunities for dividends or accessible investment products to build a nest egg. Then there's the big one, transaction fees. How much will it cost to move your money around, especially for those essential transfers to mobile money platforms like M-Pesa or Airtel Money? These small charges can add up significantly over a month. When it's time to borrow, whether for a small business, a family emergency, or a mortgage, what are the terms? Are the interest rates reasonable? And is the application process transparent and fair? And what happens when things go wrong? Is the customer service responsive and helpful? Can you get a problem solved quickly through an app, a phone call, or by walking into a branch? Finally, in our increasingly globalized world, does the bank support your international needs? Can you easily access your funds at an ATM abroad or make seamless payments through their digital platforms while traveling? To answer these questions, let's start at the top with the titans of the industry. KCB, Equity Bank, Colorado, Operative Bank, and NCBA. These aren't just banks, they are financial institutions deeply woven into the fabric of Kenyan society. They dominate the landscape, holding the lion's share of assets, customer accounts, and physical branches across the nation. KCB Bank, the largest by asset base, often feels like the default, legacy choice for many. It projects an image of stability and reliability. Its popular Simba savings account offers a tiered interest rate, currently paying between 6 and 8.5%, rewarding those with higher balances. For investors, KCB has historically been a solid bet, with shareholders recently earning attractive dividend yields of 5 to 10%. Its vast network of ATMs and agents makes it one of the most accessible banks, not just in Kenya, but across the region. Then there's Equity Bank, the challenger that grew from a small building society into a regional behemoth. Its story is one of financial inclusion, famously banking the unbanked. Today it's renowned for its massive digital footprint and an ever-expanding presence across East Africa, while its Easy Save account offers a more modest interest rate of around 5%. Its strength lies in convenience. Shareholders have enjoyed healthy dividends of 7 to 8%, and its seamless integration with M-Pesa makes it a favourite for millions who rely on mobile transactions daily. Cooperative Bank holds a unique position, born from the powerful SACCO, or Savings and Credit Cooperative movement. This gives it a loyal customer base rooted in Kenya's cooperative societies. Its savings accounts typically offer interest rates between 4 and 6%, and its dividend yield has been steady at around 6%. Because of its origins, it's particularly popular with salaried employees, farmers, and cooperative members who benefit from its specialized products and deep community ties. It's a bank built on the principle of collective growth. NCBA, born from the landmark merger of NIC Bank and Commercial Bank of Africa, is best known for its pioneering work with M-Shwari and a robust digital banking ecosystem. Their goal savings accounts can pay up to 7%, and for investors, shareholders have seen dividends in the 5 to 6% range. It's a strong choice for digital-first customers, including expats, who value seamless mobile integration and a powerful, modern brand. But beyond the giants, the real action is happening in the mid-tier. These banks are becoming increasingly attractive, not just for higher savings rates, but for their innovative, customer-centric products. They are putting serious competitive pressure on the established players, forcing the entire industry to evolve. This segment is a hotbed of activity, attracting both local and international investors. Let's take a closer look at 4 key contenders: I and M Bank, Family Bank, Credit Bank, and ABC Bank. I and M Bank's Fikisha Goals account is a standout, paying around 8% annually. Crucially, that interest is credited monthly, meaning your money starts compounding and working for you faster, accelerating your financial goals. For daily convenience, bank to M-Pesa transfers are free through its app, a significant saving for active users. Customer service scores high for digital support, and with a strong presence across the region, its international access is a key advantage for East African business operations. Family Bank has carved out a powerful niche by focusing on small and medium-sized enterprises and individuals. Savings accounts can pay up to an impressive 12%, but its real strength lies in providing SME-friendly loans, including asset financing and working capital. Customers often praise its approachable, community-oriented service, where relationship managers provide personalized advice, a welcome contrast to the often impersonal nature of larger banks. Credit Bank is smaller, but it punches well above its weight, offering some of the highest savings rates in Kenya. In 2025, average deposit rates hovered around a remarkable 13%. While its physical branch network is limited, it strategically focuses its resources on delivering maximum value to savers rather than maintaining expensive real estate. Its recent acquisition by a foreign banking group also signals stability and ambition for future growth. ABC Bank, or Africa Banking Corporation, also offers strong deposit rates, averaging about 12%. It has become particularly popular with larger depositors and corporate clients. This is because they pair good returns with specialized services in asset finance, trade finance, and wealth management, making it a go-to for high-net-worth individuals and businesses, including foreign entities, looking for more than just a standard bank account. For everyday users, fees can make or break a banking relationship, and this is where you must look closely. IM's policy of waiving M-Pesa transfer fees is a clear winner for frequent mobile money users. Family Bank and Co-op Bank often offer competitive rates and lower ledger fees. In contrast, the giants like Equity and KCB, while reliable with vast ATM networks, typically charge standard fees for most transactions, which can add up. The lesson is clear. Always check the bank's latest tariff guide before committing. When it comes to borrowing, the Central Bank of Kenya's base rate sets the floor, with average loan interest rates hovering around 15%. Big banks like KCB and Equity typically lend near this rate, leveraging their massive scale. However, there's room to find better deals. Family Bank and Co-op are known for more flexible SME loans, and smaller, hungrier banks like I&M and Credit Bank may offer more competitive rates, especially on secured loans, to attract high-quality customers. Your credit history is paramount. A strong score gives you significant negotiating power. So, what's the big picture? The Kenyan banking scene is more dynamic than ever. Digital transformation is lowering costs and increasing access, while mid-tier banks are challenging the old guard with aggressive rates and niche strategies. For you, the customer, whether you're Kenyan, an expat, or a foreign investor, this competition is fantastic news. It means more choice, better returns, and lower fees. The key is to look beyond the big names and find the bank that truly aligns with your financial needs. When it comes to borrowing, the Central Bank of Kenya's benchmark average of 15% interest is just the starting point. Giants like KCB and Equity often stick close to this for standard loans. But if you're running a small or medium-sized enterprise, look towards Family Bank and Co-op, who are known for more flexible SME loan products. To gain an edge, smaller banks like I&M and Credit Bank might offer more competitive rates, making it essential to shop around. Your credit history and relationship with the bank will also play a significant role in the final rate you're offered. Customer service can be a deal breaker, and it varies widely. For top-tier digital responsiveness, I&M leads with a slick app and quick online support. In contrast, while Equity and KCB boast unmatched physical reach with branches and agents everywhere, be prepared for potential crowds and longer wait times. If a personal touch is what you value, Family Bank is praised for its community feel, a trait shared by many smaller banks, though you'll have to contend with fewer physical locations. It's a classic trade-off between digital convenience, physical presence, and personalized care. For Kenyans abroad or frequent travelers, global access is key. Your Visa and MasterCard from any Kenyan bank will work internationally, but the devil is in the details. Large banks like KCB, Equity, Co-op, and I&M generally ensure smooth international use. However, always check the fees. Smaller banks, while on the same networks, might have higher foreign transaction fees or ATM withdrawal charges. A quick call to your bank before you travel can save you from costly surprises on your statement. Beyond these traditional metrics, Kenya's banking scene is being supercharged by technology. The legacy of M-Pesa has spurred incredible innovation. Today, seamless integration between bank accounts and mobile money is standard. We're seeing the rise of digital-only banks and financial apps that are challenging the old guard with lower fees and superior user experience. The bank of the future is in your pocket, constantly evolving. So which bank is best? For maximum reliability and reach, KCB, or Equity are the titans. For the highest savings rates, challenger banks like Credit Bank and ABC, or Family Bank are strong contenders. And for an excellent all-around balance, good rates, low fees, strong digital service, and global access, I&M is a standout choice. For investors, buying shares in banks like KCB, Equity, and Co-op can yield dividends, which have recently hovered around 5 to 8%, offering a way to share in their success. Kenya's banking sector is diverse, competitive, and always evolving. The best bank is a personal choice, one that should be made after careful consideration. Whether you're saving, borrowing, or investing, take the time to compare rates, fees, and service. The right financial partner is out there, the one that perfectly matches your unique habits, needs, and ambitious goals for the future. Choose wisely, and please subscribe to my channel for the latest money matters.